Let's get to Bob Pisani and see what's moving. Hey, Bob.
Hey, guys. Happy Tuesday, everybody. 3093, remember the old high on the S&P, and essentially we're there, maybe a point or two short of that. Europe doing well, Asia doing well, Japan another big standout today. A little bit of an indeterminate open in here as we wait for the president here. Semis up, there's a little bit of a trade. Materials, that's a good sign. Utilities slightly on the upside. Banks, which have had a terrific run, flattish right now. Retail's kind of weak because all the department stores are weak. Macy's, Nordstrom, Kohl's, all on the downside. Meantime, the really big story has been the interest rate move that we have been seeing in the last couple of weeks. And this is really starting to move some things here. Here's the TLT. This is the iShares, the big treasury ETF that's widely owned, almost $20 billion in assets. You see it topped out essentially in September, and you see this big move down. This means yields are going up, of course. We had $1.2 billion in outflows in this in the last week. It's finally starting to happen. Outflows from some bond funds. Is that a lot, $1.2 billion? It had almost $20 billion in assets under management. So that outflows, that's almost 6% of the assets under management. Is that a little, a lot? No, that's a lot. That's very noticeable. So we have been waiting for this for years. When will people finally start looking at this and saying, we're at the bottom in yields, they're going to start moving up? Maybe this was the first start of it. We've seen some great moves in the banks recently on this kind of play. The European banks have had a great start to the month. Your big names, Paribas, ING, Intesa Sanpaolo, they're all up 4, 5, 6, 7, 8%. Banks here at new highs, particularly the big super regional banks, all doing very well. Autos are also up over in Europe, and there, of course, is the cyclical play out there. In the U.S., in addition to the banks, we've seen nice moves up in some different groups here. Mostly these are cyclicals. Transports, new highs. Banks, the KBE, a new high. Materials is close. Staples and utilities, defensive plays, and REITs have been down this month. So there is the belief that, simply put, there's not going to be a recession in 2020, and global growth may not be as bad as some people feared. That's the simple way to describe this whole story. Meantime, there's a lot more bullishness among fund managers. We like to watch that Bank of America Global Fund Survey. They do it every month, 150 or so global fund managers. Global growth expected to improve in 2020. You might say, oh, that's boring. But they have been pessimistic all year on global growth in 2020. This is the first time suddenly they've turned very bullish on the idea that maybe things are not as bad. That's what I'm talking about. Yield curve is steeper. They weren't sure about that up until the recent survey. So this is a change in sentiment. Most crowded trade, long U.S. technology and growth stocks. Well, that's interesting because the most crowded trade for ages was go long U.S. treasuries. That was the big trade. That's now reversing, and that supports the idea that people are starting to sell some of those bond funds that have held up for so long. And the Fed, 84% said the Fed won't raise before the election in 2020. The election in 2020. Now, there's a little bit of a risk, folks, because if the Fed suddenly gets a little more hawkish, that position is going to be a little bit on the long side. But this is a real change in sentiment reflecting the idea of recession off the table in 2020. Maybe global growth will be a little bit better than expected.